Hello, hello. Good morning. Welcome to another ES Futures Trading stream. Today is May 6th. It is 9:22 a.m. Eastern Time in the US. All right, all right. I hope you have seen or you have seen the last stream. What you will see there is that this market is getting out of balance. Now we have a range here. We were talking about this also last week. We have a range here. Now it was, first it was this range here. We have 16-day range here. And there was another one up here. Like 12 and 16 days, something like that. And market was filling this gap, right? And how we were talking also how this kind of markets, when they do this, there is usually a trade, the bills here, right? And when there's a breakout of this range and comes inside this distribution or this distribution, this is when the trades happen, right? This can be either rejection, there can be acceptance or rejection of the penetration of this range, or of this one. Every time the market came down to this part here, it got less and less and less and less. There's something curious though. There's a lot of volume being accumulated here, here, here. Really high volume in these areas. The 5,000 has held. That's the kind of like a short and mid-term support. This is important, this level out here. And now the market is getting inside this range. Yeah, it's exploring above, out. I can call it maybe here or maybe here. This can be the range. All right. You can also we can also take this area here, right? With short-term support maybe being this area, this one here. Remember what happened on Friday, okay? We have a gap here. This is very important, this gap here. Every gap has been filled. We have 6 or 7 or 8 gaps below. All these gaps did not last that long actually. Have the tendency they're being closed kind of really fast in terms of days, right? They don't last too much. So this is important also, so another reference. We have very high as well. But the most important thing right now, we have another gap, right? Very emotional market. We have one gap here and another gap here. If the market opens where it is right now. So gap guidelines are in place if the market opens up here. Balance guidelines also relative to this range, to this big one here. And remember this gap. Now regarding Friday, I made a mistake this day. Because this was really bad on Friday. But I forgot something. Right? After all the craziness that we have, yearly, we have Apple, Google, Netflix, all those things that we have, right? Non-farm payrolls, FOMC, a lot of things happened in the past weeks. There was a tremendous amount of movement that we had. Right? You can check this. There's a lot of volatility we have. We have a inside month. You have only 3 minutes here. The weekly is trending higher now. I mean, it's one time frame higher. It's not a trend yet. I'm breaking out the range here. Um, what I was trying to say relative to Friday is, you could see how buyers, how this market was buying here, how it was buying, late buying coming from halfback exactly here, halfback of this period, and then halfback of the day. Oh, daily halfback, what the heck is this? Okay, here, right? I'll consider maybe this whole thing coming here. But the thing here is you could see the accumulation happening here. Where it started to buy the halfback here, and then another halfback happened here, okay? And then with this break, it just removed this laggard inventory from this day. The laggard loans that came to the market here. Was a really, really bad day to the upside. And now the overnight is just following the direction of that of Friday. I consider this a late pullback low. As long as this market, and you can see from the market opening up here, this was a downside trend. That's over now. Opening up here is a continuation of this movement. Is this going to go higher? Who knows? I have no idea. We have the 50, the 50s are right there where this market is opening. Around those numbers also, around this moving average, the market, short-term traders have a tendency to trade this moving average the same way how they trade these century numbers, right? The 51, the 52, 53, and so on. Right? Okay. I try to remain neutral as possible. I don't know why. I guess from how many you have? 1, 2, 3, 4, 5, 6. This is quite a big here. No, this is kind of like a support or resistance now from this day. It's too far back in time to be of relevance. Oh, look at this, man. Look at this. Look at this non-excess high. Can you see how much time has passed before the market comes back and correct this level here? Just 1 minute to the opening, or less than a minute. Actually, the market is open now. Let's see what happened here. The bond market, what's happening with the model market? Oh, the model market is having like it's kind of breaking here, but inside Friday's range. All right. There's some selling that. Oh, okay. The weakest market from these two is Nasdaq. Nasdaq that has been bought. The overnight has been bought from Celo. And when that happens, man, that's something. It's not good, man. It's not a good sign there. There's some pressure on the selling side on that market. The gap has been closed there. It's buying, market is buying from Friday's high. That could be a good level for longs there. Not that good. There's some pressure there to the lower side. If this market holds, there can be a good rally out of this. But has been bought multiple times from from that gap. Okay, like 4 times market now buying from Friday's high. Five times now. There was no attempt to trade. The market did not attempt to. What I'm seeing here is this market did not attempt, has failed to have upside continuation here. Okay, but it's not closing the gap here. There's tremendous pressure to the downside, but it's not doing much here. It's not doing much. It's not doing much really. They are not being successful. The selling is not being successful now. I think, this is. I'm not quite sure now. No, maybe too early here. But this is not showing weakness here. At least in the short term. What's happening right now, right at the opening. Now, has failed. This market has failed to close the gap. Now, let's see if it has upside continuation now. Now, the next thing would be closing this deal. Let me remove some days. So I will keep, oh boy, I thought it was going to happen. No, that's not good. I thought I was going to, I need something. I want to see this day here. Look at this. Look at this taper on the upper side. Both sides, right? No, right? This is a breakout of balance, remember. This is breakout of balance, 16-day range. How many days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days here. Mm. 18089 50. 18121 18120 18122 Nasdaq. Nasdaq has closed the distributions from that very elongated day to the upside, very thin day. This market doesn't need much to go higher. A little volume can make. It's very thin. It's very thin up here. There's nothing here. Literally, there's nothing here. You just need some momentum to keep going higher here. Now, Nasdaq and ES have a divergence in now. Right? Nasdaq has closed the gap. The ES has not. We are having upside continuation here. It's a little. Can you see the distribution that are being formed here? One here and another one down here, right? One of the first things we need to know or try to figure out is what kind of day are we? Hey, yeah, how are you, my friend? It's what kind of day we may have today. I'm keeping an eye. I am keeping an eye on the bond. On the bond market. The bond market is having a downside. It's having a counter-action to overnight inventory. But the daily, if you check the daily in the bond market, that market is to the upside. The market has a resolution to, it has like a 10, 12 days also range, 12-day range. It has, but the thing in that market, in those markets are, both the high and the low are weak, right? So there's potential there for a sequential trade. Just be careful. There's a relatively high volume here. Well, this was a good opportunity for something. Now, looking for continuation with the thing, right? And the first thing I believe is this thing. This is what we have here. Right? Then we have short-term support up here. This weak high has been corrected. This now is a close. This is the gap close now. Let's check what the 50 is. 5172. 5172 now because of the gap. This has changed. Up here, not that much. $51.81. Oh, buying from these gaps. And the same kind of trading that we have this day. It's the same thing. It's the same thing going on here. Right? Now the question is: are those traders going to be successful today, as well as they were on Friday? That is the question today. It's the same kind of trading going on. Same kind of buying from the 50s. Buying from very specific levels here. Very specific levels here. But the market is to the upside, okay? Don't make no mistake. We have an upside market. Regardless of regardless of type of week, if the buying is weak or whatever, the day is to the upside. Okay? Don't fight the trend. Don't fight momentum. Momentum ends when it ends. There's nothing that will tell us when momentum is going to end here. The market can keep going higher all the way, to this all-time high now. Remember the weakness that we have in the upper side as well. No bad volume relative to Friday. It's trying to push. This market is trying to push. This high is super weak now. I don't remember what happened these days. Is it selling from this very mechanical area here? This has good odds, low odds of being the lasting one here. Market just pushing. This needs some push here. There's a lot of stops about that level. More volume is coming. The higher the market goes, the higher the volume here at least, right? This seems to be this level here. I guess this is support now. The 81 here. Ah, look at this, huh? There's a good volume here. I haven't seen this kind of volume in a while. remember, don't fight momentum. Let the market settle, let the market show its hand first. Don't get too anxious to trade. The market is going nowhere. I mean, the market is going to always give us opportunities. This is huge volume here. Really, really huge volume here. Huge volume here, man. Huge volume up here. Really, that's a good volume over there. Oops. There's a lot of back and forth here from the 50s. No, this is just super questionable here. It's a lot of volume. What's the peaks now? Let's check the peaks. 40. Oh, really low volatility there. Huh. What bothers me is this high. I don't think this high is a good high. I have really low odds to be a lasting one. Relative, this day here is this one. Now this is where the volume, the chunk of the volume is. There's chewing here. It's feeding off of this volume here. And if you can see, there's not much really. It's 12s, 13s. That's not much. If I check, for example, this 30, 30s. I guess I saw some 40s here somewhere. Did I? Oh no. 40s here, this day here. And I think these still remind, these are different kind of longs here. The ones that we have here, 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 and here are different than the ones that we have here. All right. Wow, that's impressive. This is impressive here. Now, up to this point, when the market has that, when VIX was that low, around the 14s, what was weird is the ranges, right? The ranges were really wide as well. No? Being such a low volatility, ranges were low, shorts. Now that high is even weaker now. Now we have 4 white high there. And Nasdaq is just going crazy, man. That is just, that market to me is going crazy, super crazy there. This is a nice buy opportunity here in Nasdaq. Okay, this is the stop here. But I don't want to see reds here coming. I want to see more reds here. Tremendous back and forth here in this area here. Can you see how much volume this high? I don't see the numbers, right? But the reds. If I check the numbers here, 12, 14. No, this is not bad. Definitely 18. This is not bad here for this market. Now this market has closed the gap. Now let's check what happens to value here. I will check what happens to value in that one. Very, very questionable high here. Very questionable. The fact that we break from big balance means that we have other time frame participants in the market. Explaining volume is in R2 distribution from A. You have a good question there. But I don't have an answer because there is no way. I mean, I know what what you're looking for. I think it seems to me like you're looking for exactness here, because there is no way to know for me. All right. The only thing that I can do, I can speculate. I can only speculate here. what I see there, I see the market's out of balance. The market is probing above the range, and what I look for here is, does this breakout have upside continuation? Is having acceptance. One of the signs of acceptance is volume. We are not having volume here. Friday itself was a low day volume, right? Look how low it closed relative to the previous day, and today is even lower than Friday. Now, something. I don't know if you were here on FOMC, but when I see this kind of highs, this is a daily, okay? It's not this is the 30 minutes, and this is the accumulated. When I get kind of like, I don't feel that good, or when volume starts building the upper side, after the kind of movement that we have here, 1, 2, 3, including today, after the kind of moving, to the upside, we have this kind of volume in the upper side, something I don't like. I would rather have something like this in the upper side, but a little bit more whites here, right? For upside continuation. Also, but there is something there, right? Which I check this day. This is a very mechanical. This is this high here. This is a double high. Now this is a 4-wire high here. So the odds that this high is going to stay are low here. Those breakouts of balance, that's a guideline to pick, at least for me, to choose which side should I look, right, in my trades, right, or which side would I favor in my trades, for example, right? Because it's a breakout of balance, and it's not an intraday balance. For example, okay, it's not if I open this, I have this range here, up breakout to the upside. It's not this intraday here. It's not any. It is not even a daily relative to the previous day. It's relative to a 2-week range here, almost 12-day range here. Now this is what I was looking for. Oh, yeah. This is not bad here. I thought the longs were at risk here. Now, up here, I would not like something like this now. Up here. Now we have direction. We have a gap. Was a guideline first. Market rise at the opening. Try to do a counter action. It failed. Now we have direction. We have one time frame higher here. Volume is not back in the moment. Many times we are just so anxious to trade. We wanna ride the movement, right? This market is rallying. This market is going to break. I have to be long. I have to be short. The bond market is catching my attention here. Once if it takes the overnight. Oh boy, that the breakout we have in the bond market was really bad. Oh my god. I mean, breakout in the overnight. Now, if we check these two histograms, notice how value is building in the upper side, right? We have a come on. This is the daily, my bad. Now this one is building on top of this, right? This level is key here, okay? I don't want the market to come back below this hard back here, getting in here, because there's a lot of volume on the upper side here. Look what's happening here. Well, look at it. This is not coincidence. Can you see where it's buying from? Exactly from this level. I'm not saying this market cannot keep rallying. It's just telling me an idea. It's giving me an idea. If I'm long here, okay, I got to be very careful now. If I'm short, momentum can take the market really hard. If I'm long, I don't want to be long now in this right now, especially in Nasdaq. Especially in Nasdaq. I guess I will see if the market gets long and try to get a short in that market. In this one, because the gap was closed here. Because the gap was closed. Value is higher. The ES is more efficient. The ES takes more. You need more patience in when dealing with the ES. Let's check, for example, if how different. Now look at the volume, right? Let's check. Relative Friday relative Thursday was almost the same. Now you know the inventory is in weak hands, right? Long inventory is in weak hands. Let's put the Nasdaq here so we can check how different these markets are one from the other. How they trade, the way how they trade are very different. The guidelines are the same, right? But the nuances each market has are unique. Can you see where the Nasdaq is the chart in the left? I got the 50 right there. I guess I don't know if that's the adjusted or the non-adjusted. But regardless of which one it is, it's clear, it's very clear that the market is paying attention to that number. Okay? Now, I don't care which one it is. What I care is what the market is doing, right? Now, the simpler, the better. I'm going to check here. What this number is. I have just adjusted this a couple months. 1888. Okay. 1888. Let's see. Is this 1888? Yeah. This is the one. It is 1890 now. This is just the regular, non-adjusted. This one here. If I use the adjusted, it will be this one up here. Okay. Some will see, some trades will watch this one, another group of trades will watch the other one. You know, we know that this is pay attention to this. I mean, this is something that I can use. You know, I mean, who buys here, for example, right? Who buys from this high? And there were some buyers from this high. Once this high were taken, once you could see here very clearly, right? Like I was counting how many times the market came back to this level. 5 times it came, and the 6th time it didn't help. It went through, but it did not have this continuation. It closed the gap, did not start the count. When the market comes back, when it doesn't have penetration, when the penetration of this range is rejected, that's a long here. No? This is a long. The stop will be maybe 2 ticks above, 2 or 4 ticks above here, above this low. And now the next thing, you keep monitoring. Why a trade? Because it's a breakout of balance too. It's a breakout of balance. Yearly trade, breakout of balance. Now, what plays that the piece of information that is against the trade is the gap has been closed, right? But that is just one piece of information. Now, if you made 20 points, how much is that? 20 points, 25 points in Nasdaq? Man, that's not bad, right? Now, something else that I am watching. Let me check. Let me take this one also. I was watching this from the morning too. The touch. These are the bonds market. This is the 15 and this is the 30. This is the intraday, right? Look at these highs we have here in the overnight. A bunch of highs here, you know? And this rally, the rally that happened here, took these highs out. Same thing here. You know, it's more obvious here in the 30, right? Now the market has come back to this range. You look at the low here, 1, 2, 3, 1, 2, 3. This is very questionable, right? And even though, if these lows are taken, where this market is, what I'm watching here is because the market is paying a lot of attention to this market now, to the bond market. It's kind of like trading off of this market. Now this has been taken. Where has been bought from another mechanical level, halfback. Now the buyers that were buying from the 50s, very systematic, right? These are out now. These are out now. Okay, but when the selling come, when this level is taken, there's no, I mean, it just dries. There are no sellers here. Right? This level is taken, this level is repaired, and no more buyers come here. Same kind of buying, where it comes here. The thing when we zoom in, when we zoom in, we have this picture, right? I think this may be something here on the upper side. Maybe something here, closing this distribution. Oh, we have another one here. We have another one here, but this day it was very emotional day. This day here. Again, traders still buying from 50. Did you see where it comes from? It came down to the 50 and then was bought from here, right? First time they will remove. Now again, another wave of buyers come from the 50 here. That kind. If I'm going to compare the Nasdaq to ES, I guess I would say maybe the ES is like 5 times or maybe even 10 times slower. So you need to have more patience here, right? Because the volume is, you have more volume in ES. It's not going to be that easy to move, right? Or to speculate in that market in the ES as it is in Nasdaq. I'm talking for big traders, right? It's gonna be easier to move Nasdaq. You need how much capital? Half of the capital that is required for the ES, because each point in Nasdaq is 20, each point in ES is 50. Okay. Times the index, how much that will be? Let me check. How much? I haven't checked that one. 20. $360. Don't tell me it's the same. It's the same. Yeah, it's more here. It is more here. Right? So I guess it's just a speculation here. Nobody buying one contract or exercising one contract in Nasdaq requires more capital than exercising one contract in the ES. exactly the same kind. What I am what I can get from this market is the same kind of trading that we have on Friday. The same. The trading hasn't changed. Now, what is happening in the other markets? Let's check what's happening in Dow as well. You know, all of this selling that come from the 50s now is being corrected. Right? Same thing. We closed the week, um, you know, closing with a statement that this market has good also upside continuation because it has stopped. The high was right at the 50 here, here, right? Now this market is weakening here. It's doing the opposite, and this range is compressing here. Wow, seems like they might cross here. Look at these markets here. Alright. Now my time frame is 30 minutes. It's not 5. I don't use 5 minutes. I don't use 10 or 15. I use 30 minutes bars. And I got to be way more patient, right? Way more patient than a trader that may trade, somebody that trades 5 minutes for example, right? And most traders, most retail trade 5 minutes. Notice what, okay, let me put Nasdaq again. Notice where this Nasdaq has been bought again. 50, right? It was bought multiple times here, was check it. Multiple times here, was check it. But it can now the second time here in B, right? In B, you can see that once the market repairs this 50, it catch another weak level here. Right? This can be fine. This can be fine. This one. Maybe value the higher, this may be coincidence. Right? But it was being bought from the 50s here. This is weakening here. Now, look at the decrease of volume this market has. We are almost close the period. Look at this here. Right? It was up here. Now it's even lower. Now, that doesn't mean that the market has to break right now. Okay, right now, like as of 10:29, it doesn't have to break right now. But the rally that I am witnessing now is getting weaker. Right? Now the momentum, once market catches momentum, by momentum can take markets long distances. Now, talking about Nasdaq again. Now, where that selling is coming from now, right? In the same way, buying was coming from 50s or whatever. The selling is coming exactly from halfback too. So what do I have from this? The same thing that I can say about the buying is the same thing that I can say about the selling here, going on here. Let's check this selling, for example. Right? So, do I want to be short here? Knowing that the market is, knowing that the trade is to the upside, right? The trade is to the upside and the sell is coming from hard back. Do I want to be short here? For example, those are the questions that I am constantly asking myself. Right? Trying to get in tune with the market, regardless what it's doing. You can't keep going higher. It can't keep going lower. It can be doing higher. It can be going higher or lower. But what kind of trading? Does the market has conviction to the upside? Now the selling that was coming here has been repaired. Yeah? This high has been taken. And notice now immediately the next selling, where it comes from. Again, buying from the 50. Again. Well, just look at that, man. Buying from hardback, buying from 50s. This market can go to 19,000, but right now I don't want to be alone here. I just don't. Well, I feel, this is the feeling I have. You know, I feel the risk has increased considerably in the long side. Now, good trades are not comfortable, right? What bothers me here is the action that the market is having now. It's exactly the same thing we have on Friday, just like that. Now, the difference, Friday was end of the week. After those huge moments that we have, right, during the week, the huge events, earnings, or news releases that we had on Friday, today is the beginning of a new week. It's completely different. The scenario is completely different. The context is different now. It's very different. Oh, look at that. Is that the pitch shape that I am watching there? Now the 5200 is actually not that far there from where we are now, like 15 points, something like that, no? Now every time on Friday, every time the market reached this low, was bought. You know what? I guess you know what I'm trying to do here. You can read, right? I say in this market I was going to sell a rally. I was trying to find a rally to sell. That's what I say. Now, if this market comes back down to here and is bought from here, that will be definitely a sell. Now, not from here, even for any rally that may come afterwards. Just look at this. But the market's to the upside. I mean, so far, the options to the upside. Value is higher. POC is moving higher. The market is one time frame higher. This is the third day, I believe. You all remember well? How many days? One. No, this is the second day. Right? This is the second day. 1, 2. But the most important piece of information is that this is what the heck? Settle is, oh my god, look at this. Settle is right here. Huh. Did I notice? Let me check the settle. POC is right here. Right at the higher range. Now look at this formation here. There's some pressure to the downside here. Now some buyer needs to come here. Otherwise we may risk at least some rotation. Explaining volume in our two distributions from A. No. What I saw here, you know, this is intraday, right? This is intraday. I saw one here. This is one range. I can take this as a range as well, as a mini range, right? Now we have one range, 16-day range, breakout of this. That's a bigger range, breakout of this specific day. So it's another breakout, and now in the same way, I can consider this as more range as well. This is an intraday, very, very short, like this would be like 5 minutes, something like that, right? Because it dries here, concentration volume at the center. Another one forms here, right? But this is a breakout of this one, right? As long, I was paying attention to the center here, but as long as the market keeps up here, this is still an upside market. I will pay attention if when it was happening, right? The market comes down here inside. That will be a breakout of balance relative to this intraday time frame. There's a lot of volume here. 10, 16, 10s. But how can I say this? The intraday volume, the ES, is low. Okay. The specific accumulation rate, because everything is relative, right? Relative to what? It's low relative to what? Right? It's low relative to previous days. Now, if I see just the day, just the intraday has high accumulation on the upper side of A. Now, the next thing that may happen, you know, if checking Nasdaq or something, that's when you see the mechanical buying clearer there. Right? You will see maybe have A, B, C, D may buy from C half back. Okay, that's even that will be super risky now. The longs will be super risky now if that happens. You kind of like see where Nasdaq is buying, right? Again, it has bought from B, has bought from daily high back. C is buying from the 50s. D, you know, kind of like trying to look forward. If the same kind of activity keeps happening, it won't be a coincidence that if D buys from C half back. Now we have pushed to the upside. It's interesting how this shape here, right? How this push just dries. Okay. That's momentum. There, right there, momentum. But to keep momentum, more traders need to join the movement. All right. Okay, I don't have much to say. I am very cautious here today. Let's check what do we have this week. What do we have this week? We have a bunch of speakers. Pay attention to these auctions. This is the weekly. Usually I don't see these weekly claims, but the market has been paying attention to the weekly as well. You have a 30-year bond auction was here. This is the 10. Okay, just check that. Let's check that. Let's save that. I'm going to save that in my notes. All right. If you have any questions, I guess I'm going to call it a day. What I am watching here is how this bar closes. It's going to close as an inside bar. Closing as an inside bar, we have potential for another breakout. In this case, breakout of the inside bar, right? Because the potential here is if it is actually an inside bar, the breakout. I mean, the guidance I go with the breakout. Go with the breakout of the inside bar, preferable in the direction of the trend, right? We now have a trend. What's the trend? To the upside, right? We have a breakout to the upside. We have gaps. We have intraday breakouts as well, and we may have a breakout of the inside bar. If I'm talking about Nasdaq, right? Not the ES. If Nasdaq has an inside bar. Okay. I wish you guys a wonderful day. Stay safe. I hope you everything goes right for you. All right. See you. Have a wonderful day. Bye bye.